If your favorite project isn't doing one of these things, you potentially could be missing out on tons of returns. What's going on, everybody? It's your boy JT, and we are back to the Crypto Den. Thank you all for tuning in. Today, we're going to be talking about crypto burning tokens. What does that mean? What does it mean for your bags? What does it mean for the team? What does it mean for the network? That's what we're covering today. For those who do not know, my name is Jake Tullis, and I have over a decade of software development experience, which I leverage to run a crypto asset hedge fund. So I manage crypto professionally for high net worth individuals, family offices, and financial advisors. If you want to learn more about me, go to the banner and click the link tree. All right, let's get into it. What is burning in crypto? What does that mean? What does it mean when a token is being burned by a project? And is that good or bad? First thing to understand is if a project is burning tokens, there's a few reasons why they could be doing it, which we'll go over. Almost always, it is a good thing, okay? It is a practice of public financial assets in general. So if you go to securities, they do stock buybacks. This is the same thing in crypto for a majority of the time. Now, there are some instances where burning can be bad, but generally it is really good for the project. I pulled up a little slide from Investmentpedia just to show you guys what stock buybacks are and how instrumental they can be in a public company. It is a way to reduce shares that are circulating in the open market. Okay, you basically increase the value of the share in your shareholders' pockets by buying some of your own stock back because the shares outstanding is now less diluted. If there's 100 shares out there and then the company buys back 10, now there's 90 shares. So your 10 shares went from 10%, 10 out of 100, to 10 out of 90, so 12 or 13%. So you get more value, or you get more bang for your buck, if you will. It's the exact same thing in crypto a majority of the time. If a project has 10 billion outstanding tokens, the community holds 3 billion, there's 7 billion circulating. That's a great project, mainly because, they have all their tokens out there. There's no float, which we made videos about. But in general, there's 7 billion. And if they burn 1 billion, now there's only 6 billion. The amount of tokens you hold are worth more. It is a mechanism for reducing the volume or quantity of outstanding tokens or shares, which will increase the value of your currently held tokens or shares. Okay, now there are instances where this can be a bad thing in crypto, but they are few and far between. The first way that it is bad would be a protocol has a backdoor to their tokens and then they burn your tokens after you bought them. So like they literally get burnt out of your wallet. That is a scam. That is, it's awful. And there are people that are actively doing this right now. But in that situation, a burn would be bad. There's more, I would say, political bad ones or just societally bad. China, in their trial runs in Shenzhen of their CBDC protocol, central bank digital currency, which we talk about a lot on this channel, it is where the government has their own blockchain and all of your dollars are tokens on their blockchain. And then they control the tokens completely. They can just burn them out of your bank account, as an example, so they can drain your bank account. In China, they do that. If you get caught jaywalking to CCTV, facial recognition, and location services, you get approved for all three of those things, they will automatically burn, your fine out of your wallet or drain your bank account for the fine. Just boop, minus 250, boop, minus 500, whatever. No court, nothing. I mean, it's China, so America wouldn't work like that. But in that scenario, burning tokens could be a vector of control. Hey, China did this as well. If you don't spend 10% of your net income by the end of the month, we're going to burn them. So they can be used as an incentive structure in that scenario, which is not great. And then finally, some protocols have a burn mechanism, if you've seen or heard that. So this would be like the fourth total instance, but the third kind of mid one. It could be good, could be bad. So we did 2 bad, 1 good. This one could be good or bad. Ethereum's is good, so we'll look at that one. That one is, they are working on making Ether deflationary. The asset or the token Ether be deflationary, meaning every transaction is going to burn a percent of the gas, essentially the fees that the network earns. They're going to burn a certain percentage to reduce the overall supply of Ethereum, which is good. It used to be inflationary. So they're trying to make a switch to year over year reduce the supply of Ether that's outstanding, which would increase the value of the Ether you currently hold. That is really good, and they're baking it into their actual business model. And another way is like Doge, which is relatively bad. They have a do whatever you want kind of tokenomic model. They can burn and they can increase the supply of the protocol at their whim. You know, one day they could have 100 billion tokens, the other day they could have 1 trillion the next day. It really doesn't matter. Which is why I, shit on Doge and all these other meme coins. They're basically copies of legitimate projects, modified, typically for control or a backdoor or simply a scam, whatever, and then marketed as if you're going to change your life, and then they flip the switch and you lose everything, kind of a thing. Dogecoin, by the way, is controlled 70+% by one entity. We don't know who, but their miners are, consolidated. Something to think about. I digress. Here we are. What is a token burn? It is exactly like a stock buyback. Generally, let's say 80% of the time, it is a good thing. And then all those edge cases where it could be bad requires a little bit more research, which you should be doing if you're watching videos like this. If you follow me, you absolutely should be doing your own research. But in general, it is a good thing. So that's it. Thank you all for tuning in. Hopefully this was helpful to you and yours. And God bless you guys. Peace and love. Take care of one another. I'll see you.